Crypto Hotep here with another investing video. We are on week 83 of the family portfolio and dividends tracker. Just want to say thank you guys again for tuning in and watching the video every week. I know some of you guys watch them every week, so really appreciate the support here. Before we jump in, as always, guys, I always like to preface this by saying none of this is financial advice. Please do your own due diligence when investing in stocks, crypto, metals, anything like that. These videos are basically for my own edification, and it's to follow me and my family's journey, or investment journey, I should say, and just the ups and downs, and just trying to create some form of generational wealth very modestly. Again, if you want to know the thought process behind our selection of stocks, why we're doing this and all of that, go to the channel, go to week number 1. We've been doing this for over a year now, about a year and a half. So you can see the balance from week 1 until the balance now. It's actually pretty remarkable with what has happened in about a year and a half. So go ahead and check out the channel, like, subscribe, comment, share the video. Let me know what you guys think. So before we go to week 83, we'll go to a couple news items in the markets that were really surprising here. So the first one being Michael Burry closed down his hedge fund. Now, if you're unfamiliar with Michael Burry, The Big Short was a movie that that was based off of Michael Burry's fantastic trade where he shorted the real estate market when the whole crash happened in, I believe, 2008. So Michael Burry was the well-known trader that got notoriety and riches, if you will, from that very successful trade where he actually shorted the real estate market because he felt a crash was going to happen, just the way things were propped up. Everybody was getting mortgages. It just couldn't last. And Michael saw that, and he placed one of the best trades ever recorded. And it resulted in millions and millions of dollars to him. Well, fast forward, Michael Burry has always been a somewhat of a short seller. So he's always been on the quote unquote negative side of trading. So he's always sort of shorted stocks, shorted positions, never been a real bull or bullish, more of a bear, if you will. So the reason I highlighted that is because he's going to be closing down his hedge fund by year end after acknowledging he doesn't understand today's market. And it does take a lot for somebody to admit that and admit that they're wrong and also close down their business. But it also shows, and this is very important, that the markets, whether they're manipulated or not, which I do believe they are, however, the markets are structured in a way that at the end of the day, they always go up. Price always goes up and to the right forever. And if you don't believe me, check out the S&P 500. That chart has gone up and to the right for decades. And that's how the markets are. It just, it doesn't pay to short the market. It pays for a long-term vision of being bullish in the market. So investing in those good companies, having a long-term vision, and just keep buying, you will do well in the markets. Second thing, Warren Buffett's Berkshire Hathaway firm announced it has purchased $4.3 billion in Google. This is huge. You don't see a lot of big stakes in tech AI-based companies from Berkshire. You don't. They are very I would almost say conservative when it comes to these investing. They are smart. They're very smart individuals, very successful, but you don't see a lot of tech heavy stakes in businesses, right? Warren Buffett has stakes in Coca-Cola, for instance. He does have some stake in Apple, but he has trimmed that stake away in Apple. But so this is very huge. And we do hold Google in our family portfolio. So very bullish on this. And again, one of the things that I've said before is the haters out there, the Google haters have said that Google was washed up. Google was no more. ChatGPT was eating Google's lunch. They wouldn't recover from it. And yet Warren Buffett is taking a huge investment into Google. Just saying. Um, Government shutdown finally ends. So I believe it was Sunday of this week. Democrats, Republicans reached a deal, and then Donald Trump did sign the bill to reopen the federal government. While that seems to be bullish news, this week has not been very favorable to the markets, and we'll go over that very shortly here. But before we go to week 83, let's review week 82. Week 82 saw us with a balance of $3,461.17, money weighted rate of return year to date of 14.60%, dividends earned of $25.89, and a market gain of $320.50. So, what exactly happened this week? So, the balance stayed around the same. So, $3,460.77 for week 83. 14.61% year-to-date return, money-weighted rate of return, market gain of $320.10. Dividends earned, though, increased to $28.75. So what happened? What activity did we have between this and last week? We didn't have a whole lot because we weren't buying. There wasn't a lot of activity, but we did have some dividend activity. So we got a lot of dividend income here. And what's very encouraging is, even though these are small pennies, if you will, it's you got to go to week 1. You got to go to week 1 or week 5 or week 10 or week 15, week 25, whatever. Some of those earlier videos, and you'll see the dividend payments we were getting. We were getting 4 cents here, a nickel there. And now, even though it's not a dollar yet, it's really encouraging to see that snowball effect for dividends. So we got dividend payments from Apple, 40 cents, Realty Company, 70 cents, Costco, 66 cents, and then AbbVie, which is a big position in my portfolio, 79 cents. You love to see it. So let us go and review our portfolio here, bottom to top, as we always do. And at the bottom, unfortunately, is our middle child's portfolio. Has a balance of $444.91. Market weighted rate, or I should say money weighted rate of return year to date, 9.17%. Dividends earned of $4.12 with a market gain of $21.76. So this portfolio has turned around, I will say. Even though we're not in the double digit gains yet, let's go over a few things here. So Amazon has been doing good, up over 12% with Amazon. Even though Costco's down over 2%, we're not worried about Costco so much here. What we're doing is we're making some headway on Target. So Target is turning around very slowly, but it is turning around. We're down over 24% year to date, which is a tremendous number. Don't get me wrong, but we were down over 30 and 35% if you look at the tape, quote unquote. So Google up over 92%. This number is going to go up. So the Warren Buffett, Berkshire Hathaway news came out at the end of the day today on Friday. Okay, this is when I'm recording this video. So that came out today. Monday, Google stock is going to jump through the roof, I'm pretty sure. So I can't wait to record next week's video. So Sony up over 36% on Sony, Tesla up over 20% on Tesla, and then Starbucks, we're down a little bit over almost 6%. Okay. But I'm really happy about our Mills portfolio, finally in the green, looking good. It's just a couple stocks that are Achilles heel that are slowly but surely turning around. Let's go to my wife's stocks. My wife's stocks see a balance of $470.20. So it has gone down. So my wife's stocks were at over $500. You'll see here October 28th, 29th, 30th, and so forth. Then that dip happened in the market, and that brought that portfolio down below 500. Still all good because the year-to-date money weighted rate of return is over 40% at 40.24%. That's tremendous. Dividends earned of $2.42, market gain of $92.39. So everything's in the green, not really worried about it. Celsius is pulling back though. So we do have a correction of price on Celsius. That's nothing to be alarmed about. Again, stocks don't always go up. They have to come back down to correct themselves, especially if they just shoot up in a very explosive way. They have to come back down and they have to correct price, and they have to just kind of solidify price before they go up even higher, and that's what Celsius is doing. And even with that, my wife's still up over 60% on Celsius. Tesla up over 30%, and then Microsoft, my wife did add Microsoft to her holdings here, up over even the short time frame. We just added the Microsoft last week. We're up over almost 1.5% on Microsoft. Okay, let's go to our youngest. Our youngest has a balance of $496.75. Money weighted rate of return year to date 18.26%. Very similar, was up over 500, but unfortunately that market dip brought it back down under 500. Market gain of $53.84. Dividends earned of $2.51. So very similar to our middle. Sony's up over 40% here. Apple up over 24%. Tesla up over 18%. Starbucks down over 5%, just like our middle. And then Costco almost up 1%. Okay. Let's go to our oldest. Our oldest has a very simplistic portfolio. Very easy here. The balance is one of the highest balances, though, at over $1,022.58. Money weighted rate of return year to date 8.52%. Market gain of $63.06. Dividends earned of $5.36. So very similar to our youngest, Apple up over 17% on Apple. McDonald's up over 7% on McDonald's. Costco down almost 1.5% on Costco, and Tesla up over 7%. I think I mentioned this before. Watch out for Tesla. Tesla's going to keep going up in our oldest portfolio. Everything else, again, this is a very easy portfolio. It's just 4. We haven't added, we haven't subtracted. Very easy here. Not really worried about this portfolio. But yeah, this is a very good portfolio for our oldest. And then last but not least, my portfolio has a balance of $1,026.33. Money weighted rate of return year to date 13.66%. Dividends earned of $14.34. That's actually pretty good. And a market gain of $89.05. So with me, technology up over 34%. My technology holdings are Microsoft and Google. You're gonna win when you have those two, period. And I expect that number to go up, as with my wife's, just because of the whole Warren Buffett information that came out. Finance, Moody's and Visa. We are in the red in Moody's. We're down over 5% in the finance sector. I think that will turn around. Visa is just a compounding machine for a stock, so just love holding Visa there. Real estate, we have O, which we get that dividend payment from, and O's a great. It's just I consider it a money machine. That's all it is, and we're just investing in O for that dividend income as well. Pharmaceuticals is AbbVie, and we talked briefly on AbbVie because of that dividend payment right here. So AbbVie is up over 36% year to date. You can't go wrong with AbbVie. AbbVie, very similarly to Visa, a compounding machine, a dividend compounding machine as well. And then restaurants and food, we have good old Berkshire Hathaway, Clad, Coca-Cola here, and then Domino's Pizza. Domino's Pizza is also a good one that we have here for our restaurants and food. But consumer staples down over 4%, almost 4 or over 4.25%, and that's just Costco and Lowe's. Lowe's did declare a dividend today, I believe, but Costco and Lowe's, those are two solid brand names in their respective fields. 2 companies that you can sleep easy at night putting your money into, because they're not going anywhere. They've been around for decades. Not really worried about them. And that's what I'm saying. Like when you have these dips in the market, as we saw this week, we saw a very good dip in the market. That's why the portfolio, somewhat stayed stagnant, which is very tremendous to see because the market was just bleeding this week, crypto and stocks, but our portfolio remained the same, which kind of tells what type of companies we're actually investing in. And that's the thing, when you have a market dip such as the one we saw this week, you want to use that as opportunity to buy these great companies that you have now at a lower price. If you still feel the same for that company that you've done the research on and you feel highly and strongly about, then you would just consider this a discount for that company. Now, if you didn't do any research for the company and you were just putting money blindly into any company that you saw on Twitter or maybe that your friend told you about, then yeah, you'd probably be panicking and worried and stressed out. But honestly, if you've DYOR all these stocks, done your own research, fully believe in the vision of that company, and you don't mind buying at a lower price and you think it's a good deal, then I think you'll be fine in the stock market. What the issue is, people don't want to do the work and they don't want to do the research and they don't want to look up the companies and they don't want to look at maybe financials of the companies or follow the company or anything like that. They want to make it rich, or they want to get rich quick, if you will, overnight, and that's just not the case here. It took some time for this portfolio. It did take some time. I mean, just look at the 1 year for this portfolio. 1 year rate of return is over 18% here. Dividends earned over $32 here, and just look at this balance. This balance this time last year was over $1,400, and now again we're at $3,460.77. So again, guys, we'll cut this video off, but for week 83, the family portfolio has balance of $3,460.77. Money weighted rate of return year to date 14.61%. Dividends earned year to date $28.75. Market gain of $320.10. If this video is helpful at all, guys, please like, subscribe, comment, share it. Let me know what you think. Let me know what you guys are investing in, because it does help out the channel greatly. And as always, guys, thank you and happy investing.